Welcome to Epic Stock Due Diligence. Please subscribe at youtube.com/EpicStockDD. Thank you.
Hey y'all, welcome back to another potentially entertaining episode of Epic Stock Due Diligence. Now today I want to address a question. Actually, some fans posted this question. I thought it was a very nice question and opportunity to post another video. And that is, what is support and what is resistance? There's a lot of ways to explain this, and I try to put everything into as much of a common sense fashion as I can. So the way I explain it may not be the way that someone else on Wall Street may explain it. May not be the way that a beginner stock market trader might explain it. Hey, this is how I explain it. But the best way for me to visualize and understand support and resistance is to think again. Remember that fence? The bid and the ask. You've got the bid on one side. That's what you would expect to receive if you tried to let go of shares that you already held. And then the ask on the other side. That's what you would expect to pay if you tried to add more shares or start a position. Maybe you didn't even have any. So looking at this bid and the ask, this is the way I visualize. This is the way that I visualize support and resistance. When I think of resistance, I think of level 2 quotes. And you can check out my other videos where I talk about level 2, also known as L2 or market depth. But I think of, if I'm thinking about resistance, I'm thinking about, man, it's got to be a tough fight to get up, to get up, make that stock go higher, You know. I said that a lot. But the best way to visualize resistance is to think about that. What all does this stock have to go through to break through? Just visualize let's say a roadblock with spikes in the road and about 50 people with machine guns and rocket launchers. That's resistance. And you got to get through that. So looking at that roadblock with a lot of people there that are heavily armed and they've got spikes on the ground and everything, that's somewhat difficult to penetrate. But if you watch level 2, think about level 2 quotes as you're kind of sitting up on top of a mountain. You got a telescope and you're sitting there spying and waiting on these guards to go take their breaks and put their guns down and all that. So when you realize an opportunity looking at level 2, and you start to see in the beginning when all those armed guards were over there and they had machine guns and bazookas and spikes in the road, but then about 75% of them went on lunch break or whatever. So there's a lot less resistance then, because theoretically you might be able to run through there really quickly and make it, and you may not. Again, with penny stocks, it's always, and again, all of my videos are for entertainment purposes only and should not be considered a recommendation to buy or sell a security. But with penny stocks, it's always an extreme gamble. So even if you got out there and you started running through those armed guards, you may make it, you may not. You may get shot in the foot, you may have to limp the way through, but you may still make it to victory. Who knows? But looking at level 2, so if you're looking at level 2 ask, the ask side of level 2, and you're looking at those market makers, those MPIDs, those financial institutions, and you're looking at how many shares, the share quantity that each has at that price that you think is the resistance, the price level that needs to be penetrated for it to uptick. So if you see, let's keep it simple. Probably there'll be more market makers, but let's just say there's 3 for this example. So 3 of them are so this is when all the armed guards are out there with the bazookas and the spikes in the road and all of that fun stuff. The most heavy resistance that they have in that roadblock. So in that scenario, you've got 3 market makers, and let's just say it's at 0009 price per share. And 0009, each of those market makers has 100 million shares. And let's say all of a sudden during the lunch break, when a lot of those armed guards go away and they let down their defenses a little bit, let's say at that time, instead of each market maker having 100,000 shares, and keep in mind this is hypothetical, it's very rare that multiple market makers would have the same share quantity available. But let's say that during that lunch break period, that it jumps down, let's say all three of them jump down from 100 million shares on the ask to 3 million shares on the ask. That's a signal that the resistance is less intense. That's a signal that a breakout may be able to occur. Because what in the past, during that heavily armed and, you know, got spikes in the road and bazookas and all kinds of guns and a bunch of guards out there, during that time, you had those three market makers 100 million share quantity blocks. So 300 million shares you'd have to break through. And then when it dipped down, you've only got a few million. So that's a signal that a breakout can occur. So the people that have been sitting on the sidelines, they've been watching for that resistance to kind of calm down a little bit. Then they'll probably buy in pretty heavily. For them, may not be that much. A few million shares for someone that trades a lot, hey, so be it, not that much money. So then once that resistance is penetrated, then the stock can uptick. And that's a scenario where a breakout occurs, where you see, okay, I think we said it was hypothetically 0.00090009 price per share. So I mean, this one may run to 0.002, 0.005, maybe a penny, who knows. But once it breaks that perceived resistance, that resistance level where it may have been throughout the trading day, maybe a few days, maybe a few months, once that resistance is broken, then that stock can break out, and then that's when the fun Momo, the momentum starts, you know. Start to see that stock uptick and have a good time. Now the other side of that is support. So when you're looking at support, you're looking at the bid side of the fence. What one would expect to receive if they tried to let go of shares that they had in their possession. Now the support, we use that armed guard thing again too. So on the support side, we've got tanks, we've got helicopters, we've got bazookas, we've got, let's see, what else? EMPs, all kinds of cool stuff. And that's over there on that bid side. And that's when there's heavy bid support, when there's a lot of bid support, there's hundreds, in this example, it would be hundreds of millions of share quantity available for each market maker on the bid side. And when the bid support is low, when there's only maybe a few 100,000 or a few million shares, that's an indication that the stock could potentially decline. Because it wouldn't take a lot of people, and people get impatient for many reasons. They get impatient because of news. Let me rephrase that, not impatient. People let go of shares for multiple reasons. They may have found some news that they didn't like. Maybe there's another position they would rather cash out and get into a position that's moving more rapidly during that trading day. Whatever the case may be, whatever encourages a trader or multiple traders to exit their position, that's going to make that support, that bid support, is going to go away. Because if there's not a lot of bid support and only a handful of traders let go of their shares and they let go of a modest quantity, that stock's going to downtick. So when there's good bid support, it's always a healthy feeling to be in a position to where you know that you got in at a lower level. The stock that has uptick since then, maybe the stock's stagnant. Maybe it's been stuck at or around the same price per share for several hours, several days, several months, whatever the case may be. But if someone was in a position at a lower level and there's a considerable amount of bid support, it's a more comforting, again, expect to lose it all, and that's likely what's going to happen. But it's a more comforting feeling to know that there's a decent amount of bid support, because it's one of those situations where you're locked and loaded and you're just waiting for that significant material event, that perceived event, those filings that come out, you know, whatever, that will really ignite that stock, and then it'll rocket up. But it's always a comforting feeling to be in on a play that has good bid support. Even if the stock's not trading really heavily and it's stagnant for hours, days, months, years, whatever, if there's good bid support, it's a greater feeling of certainty than a stock without excellent bid support. And with that said, a lot of times these stocks, if they're held by a few individuals, even if that bid support is considerable, that bid support can be chewed up by one or just a handful of traders saying, hey, I'm getting out of this. So again, expect to lose it all. And this video is for entertainment purposes only. All my videos are for entertainment purposes only. Feel free to check out my book if you want to. I'm not here to try to pump my book, but if you want to check it out, you can go to the main page of youtube.com/EpicStockDD. You can see me in front of that bull up on Broadway, and it says buy my book. It's only a few bucks. It's available from Apple iTunes Store. You might like it, you might not. But most importantly, subscribe to my channel if you haven't already, youtube.com/EpicStockDD, and enjoy all of my entertaining penny stock videos. I hope you find them to be entertaining. I appreciate your viewership, and I've got a lot more coming soon. So follow me across all social media. You can find those social media icons on there as well. I'm a heavy user on Facebook, Twitter, and Pinterest. So thanks for watching, and y'all have a good day.